Also out with earnings this morning, our parent company, Verizon, topping earnings expectations, but revenue dropped after the company lost 68,000 cell phone subscribers as social distancing measures took place. Our Julie Hyman spoke with our CEO, Hans Vestberg, just a short time ago, and here's that interview.
Verizon earnings out today, and overall revenue down 1.6% year over year. If you look at the earnings per share number, excluding items, it came in at $1.26. That is 4 cents better than what analysts had been estimating. I'm joined now by Hans Vestberg, the CEO of Verizon, which we should mention is the parent company of Verizon Media and Yahoo Finance as a result. Hans, it's great to see you. Thank you for joining us. So when you look overall at the earnings and revenue picture here, and in particular that revenue decline on a year-over-year basis, I know that you had to increase some of the provisions for bad debt, basically people not necessarily able to pay their bills right now. Talk to me about that picture, how many customers affected, and how much that looks like it's going to broaden.
Yeah, so if we look at our quarter, we had a really good quarter. I mean, first of all, we had a good service, wireless service revenue growth of almost 2%, which was strong. And of course, we had a very good up to the pandemic broke out here in the US. And then, of course, it slowed down. And we decided very early on also to close our stores or actually have a limited stores open, only 30%, which, of course, impacted. On the other hand, we had a good result with our earnings per share, 1.26, which is a growth of 5%. And that includes all the provisions we have done for COVID-19. So that's some 4 more cents. So I have to say the team has done a great job in the headwinds that we had the last couple of weeks, where, of course, the activity has gone down quite dramatically when it comes to sales, especially on the wireless side. But on the other hand, we have now seen innovation. Of course, our digital sales is up, as well as we're delivering our Fios from outside the home. So the innovation comes after a couple of weeks here. So I think the fundamentals is strong in general for our business, with a lot of growth in our networks and a lot of demand for our services.
Yes, I did notice that there were 59,000 Fios internet additions, because obviously a lot of people at home, they need strong internet service if they're going to be doing all those video calls. But again, I just wanted to press a little bit more on this idea of people who need relief. We hear a lot of stories about people who are trying to get mortgage forbearance or are able to get a break on their rent. And of course, one of the places they might also be looking is their phone bill or their internet bill or their Fios bill, et cetera. What are you seeing on that front, both on the consumer side and on the business side?
So what we can say between sort of 15th of April to 15th of March to 15th of April, of course, we have seen that the gross ads sort of year over year is almost down 50%. So, of course, first of all, the activity is much lower. At the same time, we have also made the provision of for bad debt have increased with $228 million, which, of course, reflect the situation that there are vulnerable people in this time with so much unemployment, etc. On the other hand, we have said that for residential consumers, small and medium business, we're not disconnecting and at this time. We think it's absolutely right to keep them connected. It's so crucial they're connected when they might have lost everything else. So that's why, of course, we see an increase of bad debts in this time. But we think it's the right decision long term to keep them whole. Ultimately, you manage your 4 stakeholders, your customer, your employee, society, and your shareholders. And in times which is totally unprecedented, I think it's right to take long-term decisions right now that really is going to be positive for all stakeholders long-term.
Right. Let's look a little more longer term. I want to turn to the forecast, because there's a new forecast from the company now for adjusted earnings per share growth of -2% to +2%. That's a decrease from before, when you were expecting a rise of 2 to 4%. Is that mostly because of that bad debt expectation, or are there other factors there?
There are some other factors as well. I mean, roaming revenues is coming down, and of course, small and medium businesses are investing far less at this moment. The hardware business, as I said, is coming down as people are trading much less. The switcher pool is less. So there are a couple of factors that is making it up. And what we have said is that we want wanted to continue with the guidance on EPS, even though the range is a little bit broader. And we also said that we assume that it's going to be sort of a fairly normal business in the second half of 2020. That's an assumption. We don't know, but we thought it would better for our shareholders to get our transparency on how we see the situation right now. That's why we kept our guidance.
Right. And you're withdrawing the revenue guidance, which is like many companies out there. Also, it seems as though you're sticking to plan when it comes to most of the capital spending, the savings plans at the company, and of course, your commitment to 5G, which I know has been really a big focus of yours. So what does that trajectory look like now because of all of the uncertainty happening right now?
So very early on in this pandemic, we decided to split our team in one crisis management team that is managing this tough and hard pandemic, and one team working at business as usual. What we've seen so far in our business as usual is that we are on plan for our 5G deployment and all the commitments we have done, as well as for our fiber rollout. We think it's important to continue to develop and as a company and coming stronger out of this, but managing also the health and safety of our employees. And so far, up to today, our plans on 5G to launching 60 cities, coming out with 10 mobile edge compute centers, launching national coverage later this year, all that is on plan. Of course, there's going to be hurdles that we don't know about today, but so far, our engineering team has actually found ways around it as we came into this pandemic to continue to roll out. So for us, we feel that we are in a good position, and we wanted to continue to invest and seeing that we are actually coming out stronger from it. And ultimately, our customers need these type of services as we go forward. With a new normal, it's going to require even more technology.
Hans Vestberg is the CEO of Verizon. Hans, thank you so much.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.